Good morning, everyone, and welcome back to Craw Park. Let's jump right on in. So today I'm going to do the recap for Friday, but also to just give you some insight on two different distinct trading styles. So our buddy AMD gave us a little bit of a rough road on Friday. So as you can see, I mean, pretty much from the open, a lot of different chop. This right here definitely threw me out of my trade for a small loss there, but um, getting rid of this noise, you see that, it's breaking the VWAP here, holds the 9 EMA, and then we have a nice trade up. And we actually marked off this resistance line, and if I zoom out, I'll be able to show you where it actually came from. So as you can see, it actually came from the previous day pre-market high. So you remember in the previous video, we marked these two levels off, the opening range max and opening range min. And that level actually carried over to the next day. If we just follow this top line here, and it's going to adjust based on pricing, but as a matter of fact, I can just keep it as manual. All right, so we just follow this top line here. And as you can see, it's the bottom line. So we follow the bottom line over the opening range min for the pre-market trading on Thursday. We follow it over right here. Very slowly. And we see that even the next day, the market reflects that price level. So this directly correlates to what we talked about earlier, right? The stock market is nothing more than people, and people are creatures of habit. And so, as I just showed you, the pre-market low for Thursday, the previous day, held true as a level for a resistance point here on Friday. So, if I zoom in, we see that it tests that level, and I'll go back to auto. There we go. It tests that level and honestly acted as resistance, right? It tries to push above it, can't do it. As you can see from this candlestick here at 9:55, the high is up here, but as you can see, it closed back down here. So a failed attempt to break past, another one, and then we just see a nice fade. So, so that is my normal strategy. I trade high volume, mid to large cap stocks. And I'll get into what those are in later videos. My wife and I were talking, and based on some feedback about more beginner type videos, we're actually going to come up with some game plan next weekend about what is the quote unquote curriculum for things that a beginning trader should know, or even someone that's interested in the stock market, right? What they should know. And so we're going to definitely plan that out next weekend, and then be able to give you Craw Park's version of a curriculum for someone interested in the stock market or in day trading. So that's my strategy. I trade these stocks that are moderately priced, right? So AMD is priced in the $55 range. It has very predictable movements. They're very slow. This stock, this range here is what, 50 cent. This range here is around 50 cent as well, right? So you have these nice gradual movements. They're very slow. I mean, this is the market open, which is kind of choppy, but for the most part, you have these very slow and gradual movements in the market, right? And these movements take about an hour, 30 minutes, and even possibly for hours to, transpire. Whereas you have other, and also too, these are high float, which means that this stock has a lot of shares outstanding, right? I think it's like 1 billion shares are outstanding on this stock. You take other stocks like IMRN, right, that are low float, which means they have a smaller amount of shares available for trading. These stocks are very volatile, as in they move violently, but move very quickly, and you can profit greatly off of them, right? So as you saw, AMD is priced around $55. So it takes a quite amount of capital to profit off of those 50 cent a dollar moves. Whereas stocks like this, right, that are, as you can see, the price started off below $8 on Friday, but as you can see, went up to a high of almost $16. So the difference is these stocks move very quickly. They're highly volatile. They're cheaper, and the reason they move so quickly is because they're low float stocks, which means that there are a significantly less amount of shares available for trading. So we talked about the scarcity principle in a few videos ago, and this plays directly into that, right? So scarcity just means that you have a limited resource, and so these low float stocks have a low amount of shares available for trading. And so when you have an item that is in demand but there's low supply, then what happens? The price goes up. People are willing to pay more for that. Think about sneakers, right? Let's talk about some J's, right? So Michael Jordan's brand, some of his shoes, mainly the retro Jordans, they go for $200 in the store, but sites like StockX and a bunch of other resellers, they sell it for much more because there's a demand, a great demand for that stock, for that shoe, and there's not a lot of supply for that shoe. So the stock market works the same way, right? There's a lot of people that want to buy the stock, but there isn't a lot of demand. And so the scarcity principle states that there's going to be a higher price to be paid to obtain that item. In this case, we're talking about stocks. So as you can see, I mean, the reason a lot of traders like this style is because number one, the stocks are usually cheaper, right? So AMD's $55. This is less than $8, and you can profit greatly, and you can actually size into these a lot more, right? So it takes a lot of capital to get 1,000 shares of AMD, but it takes much less capital to get 1,000 shares of IMRN, right? Because the price is significantly lower. So I mean, just think about it, right? So AMD, the average ATR, our average true range for that stock is about $2, 250. So that means that it moves an average of 2,050 cents per day. But as you can see, this stock went from $8 all the way to a high of $16, which basically means it doubled its share price. And I mean, you could have made a significant amount of money in that time. But as you know, with more risk comes more reward, and vice versa, right? So you can have a lot of reward for trading these low float stocks, and I know a lot of traders that actually do that, but there's also a lot of risk, right? So these stocks move up quickly, but they also move down quickly, right? So let's take a look at these two scenarios here, right? It's hit a high of, let's say, $13, but it dropped a point and a half, right? 2 points very quickly. And think about that, right? AMD, it may drop 10, 20 cent, okay, but for this stock to drop 2 points, 2.5 points, which is a synonym for dollars, in a minute, I mean, you take 2,000 shares of that and it drops $2 on you. I mean, you've lost $4,000 very quickly. So this is something that I traded in the past and have made great money. You may have seen my other videos. I was trading that style, whereas I was taking trades in seconds and was able to make money. But I realized that while you can make a significant amount of money, it's not sustainable. And so I actually switched to this large cap stock trading. So from time to time, there is opportunity to do trades in this way, and I definitely will do that, and I will actually will show you some of those trades in the future. But or you can go back and watch the old trades because I do have some live trades that were from 2018. So, but I'm gonna go ahead and wrap it up there. Like I said before, the curriculum for beginning traders and those interested in the stock market is coming soon. So just stay tuned. Thank you guys so much for watching. I really do appreciate it. I'll talk to you next time. Thank you.